All right, Chuck, I know there was, to me, puzzlement in the sense that this was a blowout quarter, frankly, as you said, strong end to great year. But then very abruptly, you talked about this quarter really not shining at all. Maybe you can explain to our viewers how a juggernaut like Cisco could turn into a company that is really kind of fretting about this next quarter.
Yeah, well, Jim, first of all, I appreciate you acknowledging the great performance that our teams put forward last year, and particularly in Q4. And they really did a great job. We had a phenomenal year and a phenomenal quarter. As we look at what happened in the last quarter, we saw two things, really. We saw our service provider segment continue to be weak as many of those players contemplate 5G architectures and thinking about how they're going to build that out over the next few years. And then we did see some weakness in China. And I think Carl mentioned it earlier in the show. I think Kelly said on the call that we were down greater than 25% in China. And, and you made this point earlier, while it's a small part of our business, when it falls off that precipitously, it creates a challenge. Now, the rest of our business, if you look at all of our orders, which is the vast majority of our business is outside of service provider, those orders were up mid-single digits, with public sector up 13 and commercial up 7. So we still saw strength in other parts of the business. But during July, we felt a slight change in sort of the overall macro versus what we'd experienced in the prior months. And that just gave us a little caution, because when we finish our year, when we finish our quarter, we know how that feels. And it just felt a little different. So that just gave us a little caution.
Well, Chuck, also, there was a moment where you could hear a pin drop on the call where you described, again, only 3% of your business, but what the Chinese are doing when you want to bid for business. So why don't you fill us in on that?
Well, Jim, in China, I think as we have been operating there, clearly there's a lot of tension between the two countries. I've always said that the trade tensions and the tariffs can impact us in three ways. It can impact us on our business in China. We can have direct impact from the tariffs, or we can, obviously be impacted if it bleeds into the global macro environment. And we certainly saw an impact on our business in China this quarter. A lot of the state-owned enterprises, I think, where they have optionality, they're choosing local manufacturers. And, we're just being told in some cases that they're going to favor local vendors, and that's just the way it is right now. So we don't know if that's a short-term thing, a long-term thing. We're hoping that it's temporary, and once we get to some resolution, that, we'll gain more robust access there, but that's what we're experiencing right now.